The market is up from its December 2018 low. It has performed incredibly well. It's off of its all-time high, but has definitely risen up. If we stretch our view just a little bit further back to January 2018, we may be reminded that the stock markets are actually below those levels today. That's 15 months of easy monetary policies, and the overall market has been extremely volatile and inconsistent with the behavior seen in 2017. Something ain't right. You came here for the truth, so let me unveil that for you. Today we're going to talk about the markets. I want to talk about the trade issues. I want to look at particular analysis that I found that I thought would be interesting for you, so let's begin. Here we're looking at the stock markets. On the right hand side, you can see it is a sea of red. Now this right here could change at any moment, as you know, but I'm just presenting it to you at this time to begin this video. When you see what has happened with the trade issues back and forth, this has constantly been adding on top of each other, appending all of the damaging issues that have been occurring. You've seen the tariffs, you've seen the buildup of tensions, you have seen the crisis that has been manufactured, and unfortunately this will not end well for those people who are constantly buying in at the top. There is no possible way that this will end well unless we are going to see a quantitative easing for. If the Federal Reserve is willing to bring interest rates down to zero, possibly into the negative, and then start up some sort of quantitative easing policy, that will definitely get the markets to rocket higher. As I said in the introduction, if you look at this, we are actually below the level that we were at in January of 2018. Now, does that mean that we couldn't see a new high at this point? Of course we could, but we're going to need some resolution to the trade issues and probably going to need at least one reduction in the federal funds rate so that the market feels that they have their easy money forever and ever, even though we're already at a level that should be regarded as very easy. That's the way the world works today. Morgan Stanley sees global recession in 3 quarters if there is an escalation in the trade issues. Investors are overlooking the threat posed by the US-China trade issues, which could send the global economy into a recession in less than a year, and that is according to Morgan Stanley. Investors are generally of the view that the trade dispute could drag on for longer, but they appear to be overlooking its potential impact on the global macro outlook. And this is what is very important, because when you're looking at this, understand it's not just these 2 countries. They have a ripple effect or a domino effect that affects everything. Despite the fact that these are 2 massive economies, you have to look beyond these 2 in order to understand how it all works. Think about Europe as an example. They are suffering. That could spill out easily into other countries, not just geographically, but of course any of their trading partners, and even outside of that. The US has backtracked. China releases official document blaming America for the trade disputes that are going on today. China's much anticipated white paper says that the global trade problems were started by the United States. So now we have the finger pointing that is going on, and it seems to be in full effect. There's no doubt about that. The document says that the United States has been unreliable during talks, and it claims that China wants mutually beneficial talks. And we're going to hear this from both sides. I don't necessarily believe either. We don't know what's happening behind the scenes. We get these unofficial, undocumented sources that say one thing or another. All I know is that we have not got a deal, even though we were told time and time again it was done, it was ready, it was all there, just needed to sign on the dot, and unfortunately, that hasn't happened. We want to see something that is positive for the economies of both of these countries, and unfortunately, we're not there. I found this to be really interesting. The information comes from Deutsche Bank. US-Mexico manufacturing supply chains highly integrated, with 2/3 of the US imports taking place intra-company, that's between factories owned by the same company. Some manufactured items cross the border more than once, which will become cost prohibitive. Obviously, they're talking about the tariffs on Mexico here. 67% of US imports from Mexico are intra-company company trade. You got to think about all these companies that are basically sending these goods back and forth over the border. This would hurt. I think that what is happening between Mexico and the United States may very easily get resolved at this point compared to what we're seeing with China. There are many analysts out there who suggest that could take literally years. And as I've said from the beginning, what we're looking at here isn't just about this trade deal. We are seeing them actually battling out for hegemony. Neither side wants to lose face. Each one of them wants to go back home and say, look, we won. This is beyond just a simple trade deal. We've already had both sides saying that they would do this, they would do that. That information became public. Whether or not it's true, we don't exactly know, but there is some information today that is coming out that is quite evident. Both sides are not seeing eye to eye. Then we also have what's going on with Mexico, and it only further compounds the issue. So that brings me back to this point. Out of Northmen Trader, he made this post on his website, and it had to deal with the fact that while we're off from the all-time highs, this happens to be the S&P 500, the actual current level of the S&P 500 is below where we were at January 2018. We can also see this for the other markets as well. If you look at the NASDAQ, this happens to be the only one that is up just 1.49%. All of the rest are actually below their levels. Let's take a look at some other charts here that I think are important to basically break down. This happens to be from JP Morgan. Probability of recession beginning within 1 year based on the economic data, showing you this, 40%. Based on the S&P 500 and the BBB spreads, it's about 30%. And based on the yield curve, you can see it is now at 60% odds. This has increased dramatically, in fact, just over the last year, as we have seen things worsening and worsening in the bond market. So we go back to this point, just showing you in this case the S&P 500. And like I said, we are off from the absolute peak here of the S&P 500, down quite a bit, as you can see. It is currently at what looks like 2752, as you see here. Looking at this tells me that we are actually far below the level of January 2018. Now this tells us something about the overall stock market. Obviously, there have been stocks that have risen higher ever since. What is also interesting here is that when you look at the RSI, it tells us that at this point in time, we were definitely overbought. We saw this previous instance where we were at the top end of the RSI, as well as this point here. Over and over again, this tends to happen. Everybody denies it. Everybody looks the other way, and then it happens again and again. The markets always seem to retrace their steps every time, but the difference is that we aren't able to get much past where we were previously. This has now been 15 months of this zigzag pattern that we're looking at, and unfortunately, without some sort of achievement, whether it's the trade issues, whether it's with the Federal Reserve, how in the world are they ever going to get out of this mess? This is something I feel that is very important and is not understood by the majority of investors, all the way from the 7-share of Amazon type investor, all the way up through the fund companies and so on. Buying the 10 most underweight stocks and selling the 10 most overweight stocks by active funds has generated alpha in the past years, with the exception of 2017. So the blue line is the bottom 10 and the yellow line is the top 10, and you can see this every single year. The only exception is 2017, where every single month throughout that year we saw the stock market rising. In fact, I think it was 13 months in a row that it rose. This is almost impossible historically, but it did happen. Look at the other years where you actually saw something very unusual for most people, because all they simply do is add to the positions of the stocks that they like, most likely FANG stocks, tech stocks, the names that we've come to love. And yet most people have no idea That's all for this video. If you found it informative, please give me a thumbs up when you give me a like on this video. You're supporting me and this channel, so I do appreciate that very much. If you want the financial education you were not taught in school, these two books have everything you need: the foundation, history, all of the details for the stock market, bonds, everything you need to know. Check it out at the link in the description if you want the audiobook that's available at themoneygps.com. Don't go anywhere, there's so much detail in this video here. If you haven't seen it already, definitely click on it and I will see you there.